Hi, this is Sai Morton with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the forexbsummit.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit forexbsummit.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys. Today we again will take a look at the gold market. Although you know that initially I thought maybe to take a look at some other asset, maybe on some currency. But since we've got some new inputs on the gold market, it's probably right now is important to take a look again at the gold. Because on the next week, it's probably, we're not sure, but it really could happen that market finally will get the direction. Since you know that Ms. Yellen will speak on Friday in Wyoming on the Jackson Hole. This is regular annual speech of the Federal Reserve. And here, as recently we have heard some comments from the Federal Reserve representatives that probably investors have treated not quite correct the recent statement of the Federal Reserve on the rate, and some more hawkish hints have appeared, for example, from the President of the Federal Reserve Bank, from the Dudley. So that's why investors are waiting for this speech on Friday of the next week. So probably this could become the driving factor for the gold market. In general, although theoretically the bullish setup that we have discussed is still valid, and maybe it even will be completed, we do not know that, but technically right now we see that chances on the successful completion of this bullish setup are melting day by day. Why? Because market is very heavy and it's very lazy, reacts on different statistics and new data that appearing around. So even the supportive statistics that have been released previously was not utilized successfully. So, for example, this candle that we've got on the retail sales market wasn't able to use for upward action. As soon as this bullish grabber has been completed, I mean on the weekly chart, this swing is a bullish grabber. Market wasn't able to continue move higher. So this is really very heavy behavior. So take a look. Non-farm payrolls release has happened. And all other days on the 2 weeks, market stands inside the range of this candle. Also, take a look at these long shadows. This indicates the appearing of the selling pressure on the gold market. So that prevents the further upward action. Here, this is not really a good sign. And as long as the market stands flat after the bullish pattern, the weaker signal is becoming. So that's why currently the equilibrium gradually, very slow, but gradually is moving in favor of the bearish action. We can't say how strong this action will be, whether this will be a real reversal that we're waiting for. I mean, it's a deep retracement on the monthly chart. That just will be some short-term action after that, after which market could return back to the upward action. We can't say this definitely, but what we really see is that some bearish action could happen. Maybe it will be small, just to the 13 even area, but maybe it will take the real continuation down. But first, we need to make a deal to understand what's really happened in the very short-term perspective. And as you can see, on Friday, market has formed a bearish grabber on the daily chart, and it has dropped below the monthly pivot point. So it has challenged it day by day within the 2 weeks. In the last week, market on the Thursday and then on Wednesday has moved above it. But on Friday, it has collapsed and dropped again below it. So it means that market really has no power to continue move higher right now. We're talking about it approximately for a month or so, since we know that the net speculative long positions are overloaded and investors just keep longs. And it's really just few free money that could support this upward action, because everybody already stay on the long side of the market. Who else could purchase more gold to support the trend? That's the question, and that's why it's probably indicates that market really looks heavy and has no power to continue move higher. This grabber has appeared after the 2 weeks standing inside of the range of this non-farm payrolls candle. So although this grabber maybe it's not really very significant, but the taking out of these lows around 1330 could trigger the chain reaction and market could fly right to the 13 even area. Okay, so on the 4-hour time frame chart, for example, here how this large picture looks like. This is large triangle. Inside of it is forming some minor triangle that we also have discussed in the last week. Take a look, that major sell-off is appearing, these long shadows appearing precisely at the top of the Brexit candle at the 1360 area. So market prevents breaking this candle to the upside. So here was failure attempt, market dropped. Here again, market is challenging this top, but unsuccessfully, market again dropped lower. So breakout of this triangle probably will lead to this bottom of the wider triangle, because market will return back to the normal action inside of it. First swing, second, third, fourth swing. On the fifth swings, there should be some breakout. So in this case, if market will drop this area, our logical destination will be 13 even area. And we will be watching for what will happen in this border. Take a look that right below this triangle stands very significant support area. This is confidence support. It's 1297, 1308 area. And here, guys, we should be extra careful. So if you're taking the short position here, take as a profit probably this area, because here market could show the wash and rinse at least at the first touch. Since this strong support, market could grab stops below these lows, drop to the confidence will support market, and it could return back inside of the triangle. This is very typical for the gold market. So here we could get some kind of the triangle failure pattern by the Jordan Napoli. It has the head and shoulders failure breakout and triangle breakout, also failure triangle breakout also could become the pattern. So major idea of this pattern is existing of the strong confidence support below the line of the triangle that could return back, could push market again inside of the triangle and trigger the failure breakout. That's why we could trade it probably on the short side of the market only tactically with the target no less than 1308 or 1310 probably area. That's the major idea. So if you have the bullish sign, bullish view on the market, it's better to stay for some time away from the taking the long position. At least market will resolve the situation with the daily grabber. So either market will complete it or it will fail. So for example, if market will reestablish upward action here, return back above it, and continue with this butterfly maybe. So in this case, you could return back to the idea of the taking the long. So you need to see that this grabber will be either will fail or it will be completed. Only after that, you could again start to think about taking the long position. If you have the bearish view, well, you probably could think about the taking the short based on this pattern, but this trade should be very short term, because do not forget that this swing on the weekly chart is the bullish grabber. That's why it's better not to take too extended targets. Maybe this one, maybe market will form this butterfly, by the way, as you take a look. Although I do not like the butterflies in the top, but probably this butterfly could be formed. This 1618 extension, but if you will add 127, so it probably will coincide with the confidence support. Let's take this. Right, you can see that 127 stands right inside this confidence. So that's why the target, your target should be somewhere in this area. Also, you could take even small target if you are trading on a 15-minute chart, for example. Then you could focus directly on the daily grabber and take the target as the 1330 lows to break out of this area. So, for example, how you could build your trading plan. If you would like to take the short position, you could watch for an hourly picture. You could see the market has formed here multiple bearish grabbers that also suggest the taking out of this top. And you need to wait for and watch for some patterns that will show you where you could put your stop, and that could confirm that the market really intends to drop lower. For example, if you'll see the butterfly, this market will test weekly pivot point in the beginning of the week, will show this 618 retracement to the 1344 area. Well, that is one of the levels that you could watch for possible taking the short. Maybe some other pattern will be formed. But just wait for some clear setups that will help you and make you give you an assistance with the deciding where to place your stop, and will show you the target. Also take a look that this butterfly, potential butterfly, has the target right around weekly pivot support one, and it's precisely at 1330 lows, the same target as the daily grabber has. It's right here. So this grabber suggests first the breakout of just minor triangle, and after that we'll see what will happen with this larger one. So that's approximately what we see right now on the gold market. So as you can see, this is mostly the tactical work, no impact yet on the high time frames, on the weekly, on the monthly trends, but this is, guys, just step-by-step process, starting from the intraday charts, but it's later is turning to the high time frames. So we're starting right from the beginning. So we're dealing right now with the tactical steps, but even now we have more patience and more clarity compared to the last week or 2 weeks before that we had. So that's why some progress is appearing on the gold market with the behavior. Maybe even on the coming week we will get the direction. Maybe, as I said, the Wyoming statement will be the driving factor. So we will see.